Welcome to the Investing Advantage. Today, I've got a very special guest, Quentin D'Souza, and he is the host of Get Real Wealthy. It's a Canadian-based podcast. Quentin and I have kind of got to know each other over the past, I don't know, maybe 6 months or so. And he's based in Ontario. He's got a portfolio of over 80 million. We were just talking offline. I'm going to let him tell you a little bit more of the what will seem to be unreasonable or unrealistic returns. And neither of us are telling you that these are, what was earned in the past is what will happen in the future. And so none of this is financial advice or investing advice. We just want two guys that have invested in real estate for a long time. And what's interesting is Quentin was a teacher, and he was able to pivot and really build substantial portfolio. And so I think I want to hear more about that. Both my parents are teachers. And so I don't know many teachers that have went from, that kind of corporate, if you want to call it that, to building such a massive portfolio. And just to kind of give you a little bit of context on Quentin and how much effort and energy he puts into things. He asked me to speak to his Durham real estate investment group. And most often when you get asked to speak, the host will do kind of a typical bio on the individual. But Quentin went out of his way. He found one of my coaching clients, asked him to do a video, and then that video now became kind of the intro. And I got to tell you, it really kind of makes you feel special and important. And I think I just really wanted to highlight that because I suspect that trait and character that Quentin has is why he has been so successful. And so, like I said, even though I've only known him for a short amount of time, I was super excited to get him on to the Investing Advantage. And so that's a long-winded introduction. Welcome, Quentin, and thanks for joining me.
Thanks so much. Now I've got like a big head from all of that, intro there, but I appreciate you having me, Shane. And it's very true. It's you don't see too many teachers in the investing space, and particularly myself. I had a master's I have a master's of education. I have my principal qualifications. I was going down that path. I was a consultant at the school board level. I taught elementary school. I work with kids. I love teaching. I still do educate people. So that's part of my why. But in 2014, I needed to make a decision whether to continue on with what I was doing or focus on real estate, because I had gained a lot of traction. I'd start really scaling my portfolio in 2008. And then in 2013, I had financial freedom because I could bank my paycheck, because my income that was coming from my real estate portfolio surpassed my income from my teaching profession.
Nice. And
then in 2014, I decided to do it. One of the things I say is I wish I did it sooner, because, I actually ended up flipping a dozen properties after I took a break for like 2 weeks, and I got really bored, and I think I drove my wife nuts. And so I basically started flipping properties. And my first flip, I actually made 6 figures. So I made more than my whole year teaching before that.
Yeah.
But after a year of doing flips, I realized that I had actually just given myself a job again. Yeah. Like I had actually given up a job to take a more intensive job. Yes. And so I moved from flipping properties in 2015 into smaller apartment buildings, and then gradually scaled up. And that's how I've built my portfolio. I still continue to do, if there's a really good property in the 2 to 4 unit space, I'll still pick it up if it makes sense. But most of the time now I'm focused on small to, I would say, larger apartment buildings. The way that I say a larger apartment building is I'm working on a 94 unit apartment building. So that's a larger apartment building to me.
So let me ask you, because I know there's one, I'll just make a quick comment, and then two, I want to ask a question on that. And so What's interesting is I listened to actually one of your episodes on your podcast, and I think it was like 7 things I would do differently or something along those lines. I think it's a great, like, if you're considering checking out Quentin's podcast, that would be probably the one that I would recommend starting with, and then you can jump around. But it's funny because I actually think I went full time into real estate investing maybe too early, because I had a very good job at Sun Life as a commercial lender, and I was replacing my income, but not with passive. I was actively flipping, but I started to get into commercial properties, right? So, anyways, it's just interesting that was kind of, you had done it differently, and in hindsight, I probably would have taken a different path myself. But when you're finding these 94 unit properties now, one of the where are they? And you don't have to give away too many trade secrets if you're not comfortable, but a lot of investors I talk to in Ontario tell me how competitive and low cap rates, and they just hit me with all of the challenges, and I'm like, yeah, fair enough, but there's still investors out there doing deals. And so maybe you can just share how you're able to find them, and what's kind of proven to be successful for you.
Yeah, that's a great point. And yes, it's very competitive. And usually the larger buildings are bought up by like a few large players in the market. That's what you often find in markets like Ontario, because there isn't that many buildings. You could probably, maybe a couple thousand buildings in Ontario itself, like the whole of Ontario, right? So it's not a lot to pick from, and then you're starting to kind of narrow down. So I'm actually the book that I'm working on right now is finding off-market properties. So that's something that should be released in the beginning of the year. And basically, I'm talking about different ways that I go about doing that. So, and it's different from the 2 to 4 unit or 1 to 4 unit properties than how I'm doing it now with the apartment buildings. So when it comes to the apartment buildings, I'm doing more of relationships. So I'm focusing more on, I'm not a real estate agent or broker. So I have the flexibility of actually working with a lot of different people. I think it's actually a benefit to me to be able to do that. So I actually, like tomorrow I'm I'm working with a broker. I went to lunch with him about a couple of weeks ago. He, started the relationship, going to see a building. As long as it meets all the criteria that I've given him, I'll put an offer on that building. And it's about following through on everything that I say, right? I
Well,
also talk.
let me
Yep,
just jump back. How did
sure.
you, because, you know, um, I think sometimes when you're so close to something, it's easy for us to just gloss over, like, hey, we met with this broker, we went for lunch, and now we're making an offer. But if you're new, and you're especially new to the world of commercial real estate or investing in multifamily, like, often that outreach, or how you had that first conversation with a broker that didn't know you, right? What was that like? I mean, obviously you have a track record and credibility that will help, but let's face it, you're still in a competitive environment, and you're not, Boardwalk or Main Street, right? You're not Bob Dylan or Coleus, like you're Quentin. And so how did you get their attention and get, that level of trust for them to, say, yeah, you know what, Quentin, I've got faith in him, in his ability to do this deal.
Yeah, great question. So, I mean, I'm talking about all the deals that I've done in the past.
Okay.
I've talked about my people who know me already. I talk about the fact that I always follow through with what I say. You may not know me in Alberta, but people in Ontario know me, right? And that does go a long way, because although this broker had never met me personally, they knew of me, which I thought was pretty interesting. And so, I mean, one of the reasons for having a podcast is to develop that, the knowledge of people around you. So often I find people who talk to me already feel like they know me because they've listened to that, which has been quite different for me, because I've only really started that in March. But I run the Durham Real Estate Investors Club, and I've been doing that since about 2008. So I have a reputation in the Durham area, but I didn't have reputations in in some of the other areas that I have been working in now. And that's required me to actually go out and take some time to develop those relationships. I think, you know, like if I were to do things over again, I would
Yeah.
have started a podcast years ago, and I probably wouldn't have done anything else except worked on a podcast, because all of those other things take a lot of time.
Yeah.
And the podcast is really a great platform for people to be able to create instantaneous relationships. And you know, and I think that's something that anybody can really do, especially if you're just sharing, even if you go about sharing your journey into real estate investing, right? I mean, that's a good way of creating those simple connections with other people.
Well, I want to I just want to elaborate on that because I had a coach probably 5 years ago now, 4 years ago, who kept pushing me to get my own podcast. And I didn't do it because I didn't have a good name. Like that was my excuse. Now, probably there was other underlying reasons for it, but a friend of mine who I mastermind with, he's in the US. I won't use his name, but you'll probably be able to, you know, you'll probably be able to figure out who he is. He's got a daily podcast, and he went from like a government employee 3 years ago to 300 million assets under management. And he just had a very large partnership where they're putting in kind of 8 figures into his deals. And we were talking last week, and he said the partnership that came out of it, even though they had never met, this individual basically went around talking to, it seemed like every person that that he talked to knew my friend, and they all had good things to say about him. And just for context, he was essentially like the researcher. He was not pretending he was an expert in investing in real estate. He was just interviewing people on a daily basis. Now, I think that's a huge commitment and undertaking, but that's one, I think, advantage that I never even kind of thought about. And so if you just think, if you want to really kind of meet brokers, have a podcast, interview them, or interview people in that sphere, and within 6 to 12 months, people at least get to know your name, and you're on their radar. And so I think there's so many benefits to having a podcast. And yeah, I wish I would have started earlier myself. So
Yeah, and you know what? One thing I would suggest for you is you do video. I mean, you have like, you know, you're good looking, you know, you present well. I think you'd be great for video, right? So that might be something that you could expand to, and actually that I think that would enhance your platform, because that would be something that would create even more connection with different people, see your eyes, right?
yeah.
Although the voice, I think, is convenient for people who are going for walks and things like that. So
Yes.
I do like that feature of podcasts. But I think, like, for connection, particularly somebody like yourself, I think it would do well to have that sort of a video kind of that little bit different type of connection with people. So
I appreciate that, Quentin. And I think you're being extra nice because you're bugging me about my hair earlier on. But it's funny. I literally hired a gentleman on Monday, and so maybe offline I'll tell you more about this person, and that's their specialty is videos. And so I've kind of become aware of just the importance, and especially on YouTube, because it's searchable and it lives for much longer. Whereas podcast, to your point, it's great because people can do it when they're on a walk or driving. However, when people are searching for something very specific, then they are able to maybe come across a video and go from that. So I want to pivot right now, because one of the things that I think investors, active or passive, they like to know about real deals, right? Often
Yep.
we are surface level because we're maybe trying to cater to a broader audience. But I think it would be really neat to just kind of hear about some of the deals that you've done. And I just really want to emphasize the returns that Quentin is going to maybe share with you are they're going to seem crazy and unrealistic. And just understand that he's been at this for a long time. He's in a very hot market. He's done a lot of things right. So there's timing, there's right strategy, right place, but he's been in the game. And so once again, I would not go into an investment thinking that this is going to happen. But I just want to say that. So get that out of the way. Let's talk about, pick any deal that you want that you think would be kind of interesting, and we'll just go from start to finish.
Yeah, so I'll talk about, let's say, let's do a deal where I'm coming to the refinance. So I bought a 12-unit property in Oshawa 3 years ago. Actually, was in April of 2019, and I bought it with a partner for 1.75 million.
Okay.
And so I've been repositioning that asset. So just so you know, even let's go back even further than that. That lead came from an electrician, and so I always tell all my trades, if you bring me a deal, I will give you $5,000, right? So, that way, and remember, I'm not a realtor, so I can bird dog the heck out of everybody. And so for because of that, that's what I was able to do with this particular opportunity. Got the opportunity. I actually got a first mortgage from the seller he actually wanted to delay the closing a little bit, and I was trying to figure out the reason why, and he wanted to deal with some tax issues. So what we did is we gave him a VTB first mortgage, which allowed him to stretch out the capital gains over the 3 years. So we had the time to be able to do that. And he also wanted to continue to get income from the building without having to deal with the tenants. So we did that by getting a 5% interest only first mortgage at 1.3 million. And so that's what we ended up doing. I just had an appraisal done on that particular building. So we've got the appraisal back. It's at 2.65 million.
Nice.
I've got a conventional mortgage that we're putting on it for 1.9 million. So that means that the investment going back is going to be 500K. And then we're both going to split the additional 75K that's left over. Okay. But that partner now has, within 3 years has more than 100% ROI. Right. And what they did was that they rolled that investment into another building that we're doing. So I'm closing on a 24 unit in March, and that money is being rolled into that one. And that's what I find happens. My investors always reinvest in other projects. I have 100%. I have 100%. I wasn't sure about the last one, but he's reinvesting in another project as well. So we've got 100% reinvestment rate from the different projects that I end up doing. And it's just from that, that.
What did you do to the property? What did you do to get it from 1.75 to 2.65?
Right. So cap rates are compressing, so it's going to my favor. But we turned over five units in the building. Okay. So, and we've also changed the way that so we've also collecting parking on top of it. So we're doing, as we turned over, we get additional parking. I was able to I use Wise Meter to reduce our water footprint. Right. So I was able to get the expenses down on the water. We've converted some of the electrical to LED where it wasn't before. I've been able to the rent difference between some of the units that were turned over was like $700 in some cases, right? So we're huge bumps in a tight cap market. Cleaned out the basement units. Like the basement area, just in general, made it nicer. We're using NIAX. We're just switching over to NIAX now, so that's not really part of it. It's a tap for laundry.
Oh, okay.
Right. So instead of doing like coin rolls and things that, we just do a tap, and so laundry. So it's convenient, and it's less. Nobody really wants to deal with coins anymore, right? So it's a better system, but the funds go directly into the bank account that's associated with the corporation, right? So
now, do you manage your properties, or do you have third party that does it?
No, so it depends. So with the properties within the Durham region and area, I have a property manager that I employ and an administrator that I employ directly. I
Yeah.
don't. I run a business. I'm not in my business,
Mhm.
so that's it's a big difference for me. I don't want to be the property manager. I want to be the asset manager because that's what I do really well. And people need to be able to understand the difference because there is a difference between the two. In one area, I have a third party property manager that manages a couple of buildings, and then in another area, I have a partner who is actually their job is to focus on the management of the property management side of that, and they have a couple hundred units there. So it just depends on what area. So I actually have three different types of management, and so I'm very good at explaining the the benefits and drawbacks of each of them. But I think to each their own, and you have to, as you gain scale, you're able to do different things. So it's just something that people can experiment a little bit with. I think though, if you're just getting started off, it's good to start off with managing your own property, just one, at least a year, and then you can always hand that off. Just make sure you have enough spread in your when you're doing your pro forma that you include that management and you're paying yourself to do it too.
Yeah, absolutely. Um, uh, what,
I can talk about other deals too. I got lots of
yeah,
things that I can.
I do want to talk about another deal too, but I just want to go a little bit deeper on this. And that is
Sure.
like, um, often I will get questions around, Shane, like, how do I get into my first commercial property? How do I get into my first apartment? Like, can you go back to like maybe your first multifamily and just, in terms of like, how did you make that jump? Right. Because I think a lot of real estate investors, have bought single family and they get comfortable there, and then all of a sudden it's like, okay, the financing is different, commercial lawyers are different, mortgage brokers, so there's like
Yeah.
a whole host of new people that you don't have on your team, and so you're kind of at the whim of others, if you will. And I'm just I think it would be relevant to a listener that's kind of looking at going on that journey. Like, did you invest passively in other people's deals? Did you have a mentor? Did you just say, you know what, I'm going to take the time to learn this? Or what was the journey for you?
Yeah, so I had a conversation with another investor who was a friend of mine who was investing in buildings, and I was like promoting I was taking like if we were debating it, I was taking the cash flow side of the 2 to 4 unit properties and why it's so cool,
Sure.
and he was taking the side, look, that's right. You're right about that. But if you want to gain net worth, you need a piggy bank. And apartment buildings are like piggy banks. And that's what happens when you invest in piggy banks, right? Like your net worth grows, but also you get paid differently. And so for example, when I start with apartment buildings, sometimes I have 2 to 4 unit properties that cash flow more than the apartment building does,
Mhm.
right? And it's just because I haven't taken the time to reposition the building yet. So for example, one of the first buildings that I purchased, I well, so it was one of the first. It was a 6 unit building, and I had paid an assignment fee to a property manager. Again, I don't think I've ever bought a building off the MLS, not that I can think of. So I paid an assignment fee to the property manager. It was a $20,000 assignment fee. She had the building. She was going to close on it, but she couldn't close on it herself. And I said, no problem. I'll give you the 20K for an assignment fee and I'll close on the building. So she did. I was able to refinance that building after a year and a half and pull all my funds out. So, when I did that, I was like, Huh, this is a pretty good kind of type of, because in single, like when I'm doing that in 2 to 4 unit properties, maybe we're talking about 120, maybe $140,000, right? But when you're talking about a larger building, you're talking about $400,000, $500,000. As you get into bigger buildings, we're talking millions,
Yeah.
right? And so the jumps happen faster. And what I also found that as I was turning over units and I was becoming more efficient, my cash flow on those properties grew as well. So it took time to get to that point. But now that same property cash flows that more than those 2 to 4 unit properties. And I am able to refinance that property. And I've refinanced it twice I've bought it. So like, not only do I have cash flow from it, sometimes I'll get big chunks of equity that come back. And it's not like, $20,000 or whatever. We're talking hundreds of thousands that come
Yeah.
out of that asset. And as long as I'm taking that, and for me, I'm taking that and I'm reinvesting it into other, I don't really have a very fancy lifestyle. Like I like my truck. I like taking trips with my family, but I really enjoy the like investing in real estate. And this is what I'm like, I don't know. And this is kind of sounds a little egotistical, but my wife, I asked my wife a couple of years ago why she like continues to teach, right? And because she doesn't have to, like from where we are right now. And she's like, Quentin, but this is what I really love to do. And like, this is my calling in life. And I was like, yeah. And so she asked me, when is enough enough? How much do you need? Like, how much do you really need? Because I gained my financial freedom back in 2014, right? I didn't have to do anything after that.
Yep.
I do because it's in my nature. And I love doing it. And truthfully, the results I get, I know this is like, if you have, again, it sounds egotistical. It's my gift. This is what I'm good at. This is what I'm meant to do. I'm able to take something to turn it into something else, to create results that I'm able to help all the people around me, in particular, the people who are partners with me and myself. And I'm creating something that I feel like I'm good at. Right. And so why would I ever stop? Like I've no interest in like retiring. I retired in 2014. That's when I retired. So I don't know what anybody else is doing, but I'm having fun. So
It's so funny. So there's a couple things I want to touch on. I wrote them down as you were going through because I really want to make sure people got them. But I just want to touch on that. And I remember when I first started working with my father-in-law, my mentor, and he's certainly able to, he didn't need to work anymore, right? And I asked him a question along the lines of similar to what your wife asked you, and the difference was my father-in-law wasn't so gentle in his response to me. He viewed because I was coming into the world of investing in real estate as the idea of, okay, as soon as I make enough, then I don't have to work anymore, right? That was kind of the paradigm that I think I started with, and he quickly realized that was at least his perception of it, and rightfully so, was like, that's not the right reason to get into this, because it does require a lot of work and effort. And the type of investing we do is not passive. Like, we're actually finding deals, we're adding value. And so he was looking at it, I think, from the perspective of, is Shane going to commit to this for the long term, or is he just going to do a couple of deals, get to the point where he can just retire and sit on a beach? And that really wasn't and hasn't been my journey. But I think when you find people that are really doing real estate investing, and especially in the commercial world, like, they really do love it. It's a game. They get great at it. They're competitive. They like to win. And obviously you get to help a lot of people too, which I think is very important. So I thought that was really neat. So the four things I just want to reiterate that Quentin said is, like, number one, he's not finding deals on the MLS, right? I think that is so key, because often when people are trying to find opportunities, they're like, well, my broker's not sending me any, 5.5 cap or 6 cap deals with value add. It's like, Of course they're not, because if they could do it, if they could find it, they would do it themselves, right? So that's number one. Number two is you mentioned, I don't want to put words in your mouth, but it was like often these properties start with very little or no cash flow. And I think that is so important, because frequently an investor will look at it and say, well, the cap rate's a 2 or a 3 going in. And it's like, I remember having a conversation with a very successful, he had like $6 billion of real estate at a conference recently. I asked him what kind of cap rate he looks at for his retail. And he kind of looked at me like it was a stupid question. And I realized quickly that it kind of was. He's like, I don't care about the cap rate. I'm looking at the IRR at the end of the day, and I want to hit 20%. He's like, I'll buy something with a 0 cap. And so a cap rate is just the cash flow that you would get if you bought the property all cash. And the importance of that is when you have a fix, like when you're adding value to these properties, that is where all the upside is. And I think that is your strategy, is it not?
Yeah, absolutely. Yeah. Yeah.
And so that touched on number 3, which is adding value. And then the fourth is just the compound, right? Because you're doing deals so big. I know on one of our retail properties, I was just talking to our mortgage broker, and he says that we should expect about 1.2 to 1.4 million on the refi, right? So that is like a very significant amount of money. Hard to do that on a residential property, right? Even if you fix it and burr it and do all the, crazy things, commercial real estate, multifamily is valued on its cash flow. And so that is really what the bank is focused on. So anyways, I just wanted to reiterate that, because these were some of the notes and you went through it quickly, and I just want to highlight it for people. So I just want to be respectful of your time, but there's a couple of questions, if you're okay. I just want to ask a few more here. Knowing what you know, if you were to start over, what would you do differently? And not the going full-time faster, because we've already talked about that. What else would you do differently?
Well, I would definitely get into bigger deals. Like I did a $40 million acquisition, 7 apartment building deal. And I think I was ready to do that earlier. Like I could have done that years ago. And I don't, it was a mental block that prevented me from doing it, because it was like I'd done like $5 million deals. I'd done $4 million deals. Adding a 0 onto a deal, to me, that 0 was a big 0. And then after doing it, I was like, dang, I should have done this years ago, because I could have.
Yes.
And I think that for me was, and that size of deal is a life-changing deal, right? Like getting deals like that done is a life-changing type of deal for sure. And I feel that I'm very confident that I could do it again. And I think that, for me, that's definitely something I would do differently. The other thing, and I mentioned it before, I would have really focused on podcast, like video, like YouTube platform, but platform that's accessible to everybody, right? I think that's the big difference. The platform that I chose was, I think, something that's great locally, which has helped me to develop a reputation locally, but that is not what is needed today. Today, what is needed is to have to be on the internet and to develop a platform that is wide reaching, that people across the country could be able to access. I think that's something that I wish I would have done sooner or done differently. So
just on that, would you, and everyone's going to have a different answer, but this is one of the things that I always come back to too, is like, so we create this content and we put it on platforms to ideally get in front of people, right? And so would it be is it for deal flow? Is it for raising capital? Is it for just brand awareness? Like what would be the reasons that you would be doing this for? I'm curious.
It's for all of the things you mentioned,
yes,
including to create know, like, and trust factor.
Yeah.
Right. So people get to know me without me having to repeatedly talk to them about, how, like I had a lunch with a joint venture partner or a partner last Friday. And, he is very committed on doing, like, he wants to do at least a $2.5 to $3 million investment in a project. And I was like, that's awesome. And then he said to me, but you know what? You don't even have to say anything because I've been listening to all your podcasts. I already know what you're going to say before you say it. I was like, oh, okay. So this is really, this is still like we had a shorter lunch. I still did a lunch. I still did the things
Yeah.
that I would normally do. He's an accredited investor, you know, he knows what he's doing, but he already, like, I had already made a connection with him without having to continue to, you know, have many calls or many lunches, or, you know, which is typical for me to be able to do, is to build that trust over time. I find that it's if you don't have one, I'm not sure how you're, you know, unless you've built all of those relationships over time, and which is another way of doing it too. I think that it just makes sense to have a platform in, you know, where we are now.
It's so scalable. And some of the mentors I've had, because this is where I generally will hire coaches now, is to help me with my own platform and brand building and whatnot. And one of them, he calls it your OPN, your own personal narrative. And the concept is that by sharing your beliefs, your values, what it is that you like, you dislike, whatever it happens to be, you either attract in the people that are drawn to you, like your joint venture partner, and you repel, not because you're trying to be what's the word, like not like you're going out of your way to repel people, but it just, sometimes the messages that either you have or I have, or our beliefs, they're not going to align with everybody, and that's okay. I think it's way better off to let them figure that out on their time than to potentially spend hours, because you don't get that time back. And so you spend all this time with someone to find out fundamentally you have different beliefs on what is a good deal, how you should run this property, or whatever it happens to be. Like, I'd rather say, you know what, I got 140 episodes, you go listen to it, or watch some of the videos, or read my book, or in your case, the same things. And then at that point, they come to you and they say, you know what, now I'm just verifying that you're not, that you're the same person that you said you were. You know what I mean? Like that there's congruency. So I think the other important part is to not put on a show and then, or try to pretend to be someone you're not, because inevitably, I think it's just too much effort to pretend. And then you don't know, like, who am I supposed to be today? Right. You know, one day I'm this, one day I'm that. So I really like that.
Yeah, it's a great, for me, it's been a great way to just, like, people who know me and come out to my events know my knowledge level and know what I do.
Yes.
But if I'm not putting it out there, like a video like this,
Yes.
or like a podcast like this, maybe next year it'll be a video like this.
Yeah.
You know, you know, that's how other people outside of that group are going to get to know me.
Yeah.
Right. And know my level of knowledge and know my caliber of how I do things. Like, you know, I'm very cognizant of doing what I say I'm going to do. That's my mantra, right? Like, if I tell you I'm going to do something, I'm going to do it. Right. If I say that this is going to happen, that I'm going to move mountains to try to make sure that that happens. Right. And that's how I'd like to do things. The only way to convey that is for people to hear you and to hear the passion in your voice, but also to share the knowledge that you have. Right. And so it's kind of interesting that, you know, we're talking about platforms to do that.
Yes.
But I mean, there's lots of different platforms that are out there. You know, books are platforms too.
Yes.
I've written
Yep.
a couple books on property management, specifically in Ontario. I wrote a book on doing a BRRRR strategy, the ultimate wealth strategy. I've done action taker real estate planner. Like, I've done a joint venture book, right? Like scaling your real estate business type thing. And and all of those books are platforms in and of themselves.
Yes.
But they work really, really well with additional platforms.
Yes.
Right? So that you're reaching out to people, they are getting content, then they pick up the book, and then they feel there's a lot more confidence, and then they reach out to you in a different way, maybe for a call. I'll always have a call with potential investors before I even talk about anything to do with. I want to make sure we're aligned together.
Yeah.
I'm looking to ensure they're accredited. I'm looking for, are you looking for quick money? Are you looking for long-term investment? Like I'm going to share with you some details that you might not get in, like that I can't really say in a public podcast,
Yes.
right? And so things like that, where we go into detail through actual samples of what I'm working on right now, right? And so, and that only comes from all of those other things. You start to pull that all together.
Well, if you just think about in a micro sense, you and I met. I think it was through Instagram or Facebook or something like that. And since then, we've had several conversations. I've spoken to your audience. You're now speaking to my audience. And the business of real estate investing is relationships. And so what better way to, in your, like frequently people will ask, hey, can I take you for lunch? Can I pick your brain? And those are fine. But when you're dealing with really busy people that have a lot on the go, it's difficult. And frankly, for you and I to just have a conversation offline, it wouldn't be I don't think as productive as having this call now. We now share it, and it will probably get in front of hundreds, maybe thousands of people. And so one 45-minute to an hour conversation now will go out. Some people are going to resonate with Shane. Some people are going to resonate with Quentin. They're going to, and then that's how those relationships get built, if you will. And so I think it's just like we're doing what we're sharing with you. We're not kind of saying go do this, but we actually have a secret strategy that no one is no one's any wiser to. So.
Yeah, absolutely. And that's the thing too. Like I am deeply invested in the business. I am not just an educator that's educating. I am somebody who is like deeply involved in the actual day-to-day of the business. I have a quarterly plan, weekly plan. I have a morning meetings that I attend with different staff, weekly meetings with staff. Like I have a business, right? The commodity is real estate, but I have a business. And I think that's something that I wanted and I continue to want. So, and if people want to reach out to me, they can, and then that's how these connections all start. But you're right. Like I get asked, I don't know how many times, to like, can I buy you lunch? Can I just like have a 10-minute call or a 5-minute call with you? I'm just like, yeah, I'm sorry. If I did that, I wouldn't have the time to be able to do that. Right. Like
That's
I couldn't run my business because everybody wants to give me, they want 5 or 10 minutes of their time.
Yeah.
And that's why having podcasts and videos and things like that are helpful, because that's an opportunity for you to get that 5 or 10 minutes or 45 minutes, whatever it is, right? So just listen to those, right?
I agree.
Get started.
Yeah. Well, this has been great. I know we're getting to the top of the hour. So I think it's a perfect segue. Where can people get more information? And we'll have some links. I think you mentioned Instagram, but I'll just let you kind of share probably the best ways to learn more about Quentin.
Well, I really want people to subscribe to my podcast, getrealwealthy.com. So, and my YouTube channel, which I just started like a few weeks ago. So that's something that I love people to do. You can check my name out on Amazon, Quentin D'Souza. You can pick up all the books there. I have the Action Taker Real Estate Planner. And if you wanted to get a free first chapter, it's actiontakerrealestateplanner.com. And you can check me out on Durham REI or
just say that again, Quentin. Action Taker
Real Estate Planner.com.
Action Taker Real Estate Planner.com. Okay.
And Instagram, QMan REI, Twitter, QMan REI. I'm on the social LinkedIn too. I'm working on improving my reach through social media and just getting things out there. So I'm sure if you looked up my name, you'll be able to connect with me in some way, shape, or form for sure.
That's awesome. And, just as a parting thought for people that are considering, how do I build a platform? How do I, like, just not to say that Quentin and I have the answers, but if you follow people that are a couple steps ahead, you can watch and see what it is that we're doing. Like, I'm doing that myself to people that are at a much higher level than me, in terms of, okay, so that is how they got 200,000 people on Instagram, or that's how they got 15,000 people on YouTube. And just observe and watch. I mean, you can get a lot just from seeing what it is that they do. And maybe you like it, maybe you don't like it, but at least you'll be able to make that decision for yourself. And like Quentin said, then you don't need to spend 10 minutes to try to get this secret or this hack, because there is no hack. I mean,
It's hard work.
it just takes effort. Like that's what it is. So
Yeah, and the other thing is, this is the way that we are doing it. It doesn't mean that this is the only way to do it.
absolutely.
I have I have like a forum group and with the entrepreneur organization that's across Canada, and they're real estate investors across Canada. And the way that they do things is different the way that I do things. Some of them will just deal with high net worth individuals or family offices, and they will take down like bigger deals than I would ever be able to do, but they're doing it with that type of money instead of the way that I'm going about it, which is I want to involve more people, but I also I'm purposeful in why I'm doing it this way, because I don't want to have one entity have a lot of control over my portfolio, because what ends up happening is, and it happened to a good friend of mine, the major investor that had majority of his assets, over 30 million, said, we're selling now. And like, okay,
now you're an employee. Yeah.
Like, because that's what happens. Now he made quite a bit, and I'm sure he's rebuilding his portfolio too. But I mean, I don't want to have that happen to me. And I was very listening to other entrepreneurs. What I heard from them is like, they're building a business and Walmart is their like 90% of their business. And what happens if Walmart says this is happening? That's what's happening. Yep. Because now you're not in control of what's going on, because of the amount of pull that one and make or break, right? So what I purposefully am building something that's different, that allows me to have that flexibility. And if I have to sell because of one person, I'll buy them out myself. And I'll continue on with what I'm doing somewhere else. No one person's going to take down everything. So
that's awesome.
Yeah,
I love it. This is where you get some of the biggest insights right in the last 2 minutes. So I'm glad you stuck with us. So once again, thank you very much, Quentin. And we'll have to make this a more regular occurrence, because I think just having these conversations, frankly, I like it a lot more than having to do solo episodes. I don't mind the solo episodes every once in a while, but I think it's a little more exciting and interesting. And we didn't even talk about half the questions that I had written down. So we'll have to talk about interest rates and a few other topics that in a future episode. So
sounds good. I'm very opinionated on those, so we should have a good conversation.
Wonderful. Okay, well, thank you very much, Quentin, and we'll talk soon.